Hey guys, good morning, welcome to the live session of Stocks Network Trading. My name is Dave, guys, my partner's Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please. Secure.
Recording in progress.
Welcome everyone. Welcome to Stock Sniper Trading. My name is Ron. My partner is Dave. Thank you guys for joining. I appreciate you guys. Today's date is Tuesday, January 7th. 2025. So thank you guys for all joining. I just want to say I hope everybody had a happy new year. We're back now, full-time back. We'll be with you guys. We'll go back to our trading schedule. A couple weeks we'll do London's. A couple weeks we'll go back to doing our New York's. And we'll continue with weekly webinars. And for the VIP snipers, we're going to continue bi-weekly on the Sunday mornings to be there to answer your questions and help coach and help you guys with anything. So this Sunday, there's also going to be, we're going to get started with the lifetime session again. I believe we're on session number 5, and we'll continue going with that. And I'll be here to answer all of your questions. So I hope everybody had a relaxing, healthy, New Year with the family. You guys were safe and got some time off of the charts. You guys relaxed. Some of you guys continued to trade during the holidays. There was some days to trade. But for the most part, there's a lack of volume, and there was a little bit of a sell-off at the end of the year. Wasn't too much of a Santa Claus rally. It seems like Grinch came in and kind of took over the show. But yesterday we had some really, really good green volume back into the markets, where most of the U.S. indexes were green. And a lot of securities rebounded. So we'll see if it continues today, and we'll see if it starts in London and continues to go into New York. Okay. So with always, guys, please trade safe. Proper risk management. It's a new year. This is a fresh start for a lot of you guys. Some of you guys messaged us over the holidays and said 2024 was a tough learning year in the markets. So that's good. Every year, might be a learning year. It's not always going to be a profitable year. You're going to have to go through the growing pains and the stages of figuring this how to do this properly. So risk management is one of the hardest things to learn, takes the longest to learn. So hopefully you guys are going to start the new year fresh with risk management. Okay, guys? So treat this like a business, not like a casino, and you guys will start to see results. Okay. What the plan for today is, what we're going to do is we're going to go till 5 a.m. So we'll be going for just over a little bit over 2 hours. In about 15 minutes, 20 minutes, we have London market open. We're going to see a little bit of volatility. I'd like to stick with a theme for London. So what we'll do is we'll do index. We'll do DAX, which is the German exchange. Because it kind of moves with the London volume, with the European volume. And we'll maybe do GBP USD or Euro USD. We'll take a look at a currency that moves well for the most part during the London session. We'll look at the pound or the euro. And if we have some time, we'll look at another security. Okay, guys? Let's just have some fun. It's our first day back. If you have any questions, please don't be shy. I'm not going to bite. I'm here to help you guys. And let's get going, guys. We'll go quickly over the news today and to see what we got going on. Okay. So thanks, guys, for joining. I appreciate all of you guys. Over here in North America, it's pretty early for us. It's 2:45 a.m. Eastern, but I got my coffee and I'm ready to go. So Mark, welcome. Good morning. Happy New Year. Lorraine, Happy New Year to you. Thank you for joining. I appreciate you guys. Daniela, Happy New Year to you. Yemi, thank you for joining. I appreciate you. Happy New Year. Welcome, guys. Daniela, you're in Hull, UK. Perfect. Yeah. So it's your morning over here. Sarah, thank you for joining. Kenny, yeah, it was awesome yesterday. I got back in the markets, Kenny, with MicroStrategy. It was up again, back-to-back days of 10 plus percent. Well, it's running with Bitcoin. Bitcoin got back over 100,000. I looked at it as an opportunity to buy. I got in and made a little good return yesterday and back out of the market and ready to go again. Flash, welcome. Happy New Year. And everyone on YouTube, thank you guys for joining. I appreciate you. CL Beef Burger, good morning all the way from Netherlands. Awesome. I appreciate that. That's I'm going to visit that Netherlands. I'm going to come to Amsterdam one time. Hopefully, we got a big crew in the Netherlands from SST. Maybe we can get together and have a smoke together. Welcome, Mister. Thank you for joining. Tony Gold, welcome. Happy New Year, brother. I appreciate you. Bogaza, welcome. Good morning. Good morning, guys. And Esther, welcome. Good morning. Okay, let's get started, guys. So if you want to follow on the same chart with me, I'm on DAX, DAX, it might be on your broker. It might be the abbreviation, the ticker might be DE30. It might be DE40. It might be GER30. It might be GER40. But what it is the German exchange, okay? And it runs very similar to NASDAQ or S&P 500 with the US index. Not exactly, but you know, if you put them side by side, you should see match up like the daily candles to see how they do move. Okay, and then other days we'll switch it up. We'll do Nasdaq. We'll do Dow Jones. We'll switch it up. We'll do whatever you guys want. But today, let's just continue with the theme of Europe. Okay. So let's just go quickly over Forex Factory in case we got some news coming. Okay, so we're on the right date, Tuesday, January 7th. These are our London hours over here. So these have already gone through. Let me just refresh this. So we've already had some British news, Swiss news. Right now, as I'm speaking, 245. This is just released. French prelim CPI month over month. So we had some actual numbers already come out. They're what. Yellow folders, low impact. We had one red Swiss folder right here at 2:30. Now we move into 3 a.m. This will be when London market opens up. There is some Swiss news, foreign currency reserves. So if you're trading the Swiss franc CHF, you might see a little bit of volatility here. And then 4 a.m., 1 hour later, we got some Italian monthly unemployment rate. 4:30. We got some British news coming out, construction PMI, housing equity withdrawal quarter over quarter. 5 a.m. This is when we're going to wrap up the call around here, and then there is a continuation of some European news. You have some orange folders, which are medium impact. You have low impact, yellow, medium impact orange, and red is high impact. So that kind of dictates the volatility of these news folders. We have core CPI flash estimate year over year. And our CPI flash estimate year over year. And continuing to move, we have a British 30-year bond auction today. Then we move into the North American session over here. This is where we have our US and Canadian news. Pretty light day at 8:30. Normally we have some back-to-back red folders here in North America. We don't have any this morning. What we do have at 8:20 is COMEX market open. So if you're trading gold, silver, platinum, any of those precious metals, you do have the commodities exchange open. And we'll have that with Dave taking over here. If you guys weren't aware, here in Canada, we had some fantastic news. Justin Trudeau, our Prime Minister, he resigned and will be stepping down, thank God. And maybe we can get Canada back to normal. So if you're trading the Canadian dollar, that maybe had a little bit of volatility yesterday, today, the rest of the week going into. So just keep an eye on that. If you're trading the Canadian dollar, that will definitely have an impact on the dollar. It's already at historic lows, about 68, 69 cents to the US dollar in the exchange rate right now. So I don't know about how you guys feel about Justin Trudeau, but me personally, I'm happy he's leaving. He's just taxed the shit out of us here, so I wish him the best and take care. But we need a change over here in Canada. And continuing 10 a.m. news, you have now 10 a.m. So if you're gonna, after this call, I'm gonna go to sleep, get some rest, and then I'm going to be back up early in the morning. I'm going to be watching the North American news, especially over here when Wall Street opens up at 9:30 and 10 a.m. news. We do have back-to-back red USD folders, ISM services, PMI, and our JOLTS job openings. If you guys remember, the first Friday of a month if as long as there's no holidays or bank holidays or anything like that, is NFP. So this is our NFP week. So this is our JOLTS job openings, and turnover and layovers over here numbers. And then later on in the afternoon, we don't have much news this post New York, and then it goes into our Tokyo, our Sydney, Australia, New Zealand session news. Okay, and we'll review tomorrow's news. We'll review tomorrow's news right now. We have 8:30 unemployment claims coming out. Normally they come out every Thursday. But in the news, Thursday, we don't have it due to the NFP numbers right here. So here's NFP on Friday, January 10, 8:30. Make note of this, guys. This is a lot of volatility. This is our first non-farm payroll of the year. So please, guys, don't go high risk on the first NFP of the year. Maybe just relax, watch what's going on. It will be very volatile at 8:30 a.m. when the U.S. releases their average hourly earnings, their non-farm employment change right here. So you can see last month it was 227,000. They're forecasting a decrease to 159,000. We'll see what the actual number is coming out here. And the unemployment rate looks like they're forecasting no change from the last month over here, 4.2%. So this will be really critical in the markets to start off the year. This does affect the interest rates. We're going to have FOMC coming up with Powell again speaking. So we're getting a first of everything in the new year. So just please be careful when you're navigating through the markets this week, okay? Earnings, not going to go over the entire earnings this week, but just this morning, if you're going to continue to trade, Tuesday, January 7th, before market open here, you got RPM International, Apogee Enterprises, and Lindsay Manufacturing. No big names to consider, nothing that will really impact the markets today. Post after the close, any big names? Not really. Okay, so today pretty light on earnings. Again, get all your news. Yahoo Finance, lots of news in here. You can see everything that's going on in the markets. 2025 to focus on inflation, rates, politics, and the economy. Desjardins says as it lists top stock picks. So you can kind of click on this and you're getting some stock tips, picks for 2025. See, research, learn what they're picking. Key takeaway from Trudeau's resignation as a Liberal leader. Let's all have a glass of champagne and cheers to that. What else we got going on here? Sometimes you'll see something going on in the news over here. Shopify, okay, so they get upgraded, boost their price target, so that's good. When you see these big names get the analyst upgrades, you might see a little boost in their share price. They were up 4.5%. Yesterday, as you can see, yesterday was a pretty green day across the board. A lot of money is coming back into the new year. Maybe we might have a Santa Claus rally early in the year. Maybe Santa just came late this year. Oil prices extend losses. So there's a lot of good news in here, okay? And then if you want to look at the overall markets, you got Canadian markets, the U.S. markets right over here. You got the European markets, Asian markets. You got rates you want to look at. This is kind of what I was recently looking at, the Qs, MicroStrategy, NVIDIA, Ford, all of those names. That's just kind of my watch list. You got the top gainers, top losers, most active trading securities, trending tickers, all of these things, okay? So just gives you, it's free website, Yahoo Finance, gives you a lot you can do. You can also get your news, market data, industry news, real estate, technology, currency converter, all of this stuff here, okay? And our Discord signals was a great day yesterday, especially with selling gold. Gold took a big dip yesterday. We were looking for sells below 2,640. There was a beautiful double top above here in that supply, and then it started to come down. You can see the times. These are 10-minute candles, so around 8:30, 8:20, COMEX market open is when it started to push down, and then going into 9 a.m. really pushed down. So that was a really nice sell-off on gold. Congratulations that you guys, some of you guys that took it, and was running for 200 plus pips. So congrats. And guys, over here on our Stock Sniper Trading website, we got free blogs for all of you guys. Just come over here to more blogs. There's a lot of information here, free education for you guys. This one was just done yesterday. Jobs report sets the stage for 2025's first trading week, what to watch for. So if you click on this, kind of gives you a good analysis of what we're looking for. S&P 500, what it is, focus on the labor market. This is the U.S. job growth rebounds in November. Remember, it's month to month, so we're looking at December, November's numbers. And just looking at some other big names over here. Okay, so this is our blog that's available for you guys for free. A lot of good information. So you're going to get a little bit on price action, technicals, you get some on fundamentals. There's blogs on psychology and risk management. There's blogs on just what's going on in the market when Bitcoin hit 100,000, that historic marker. And just all kinds of stuff in here for free for you guys. Okay, and if you want to join the team, we would love to have you guys on the team. Provided for you guys on YouTube is a free Telegram channel. It's right over here. It's pinned at the top of the channel for you guys. So there's our YouTube link, our schedule for today, trade ideas from yesterday with Dave in the Zoom. Getting some good pips, guys. Okay, and this is our schedule for this week. If you're unsure of when we're trading, has all of our hours in the different sessions. And just want to wish everyone a happy new year. Let's please trade safe this year. Let's have some fun together. Continue scaling those accounts. And one quote, guys, it's time to get serious. 2025 is here, playtime is over. Okay, so let's take our trading serious. Let's have some fun while we're doing it, but it's time to take your trading to the next level, guys. Okay, let's get started. So we're going to do a little top-down analysis with DAX, which is the German stock market right over here. We still have about 3-4 minutes, then we're going to get London market open. There's going to be a little bit of volatility. I will probably be doing still an analysis on it, and then we'll maybe look at 5, 10, 15 minutes after to see how things are moving. So I'm on the daily right now, and then I'm going to bring it down to the hourly, and then we'll bring it down to the lower time frames, specifically the 5 minutes, and we'll watch what's going on in there. So these are individual daily trading days. You can see when there was resistance back in the day over here. Like I'm looking all the way back to last year, May. You can see there was resistance. It was resistance. Then it turned into green demand once we got volume above here. So I'm just going to make it a demand zone. Continuing to bring it across, you can see how it's been holding this zone, and if I stretch that into the future, just below 19,000 looks like it's good solid demand for DAX. We're up here, we're at 20,200, so for it to come all the way down here, there has to be a significant sell-off. But if it does come down in here, there's probably going to be a lot of pending buy orders waiting down there. There's also a resistance right over here where October, November of last year, it couldn't really break through there. It tested it multiple times, kind of double top and then push right back down. And you see how it was kind of consolidating in the zone. So if I stretch this across, on this daily candle, December 2nd, start of December, we had a big influx of green volume break through there and close above. So that zone, you can flip it green with the confirmation of that candle closing above and stretch it into the future. I can see on this day, December 20th, is when it tapped right into the top of that green box and went right back up, and this is where we are right now. So this is kind of like a higher low of a demand area from this one down here. This one might be a little bit more active in the next few days or next few weeks if the index sells back down into here. So I'm just continuing to go and find now we've got this area where there's resistance up there. If I look into the past, that's an all-time high. Okay, if you go on a higher time frame, you'll see that that's price discovery zone. You won't see any price action that came back all the way up to this area. So right there, from 20,500 to about 20,450, looks like it's a good area of supply. Every time it comes trading in here, it gets rejected, comes back in here, they reject it back down. So if I stretch this red box into the future, I can go even further than mid-February. You can go March, April, as far as you want. Now we can see how we're trading in here. So we've got this channel. We're below this supply zone, we're above this demand zone, and this is where we're trading. You can kind of see the move right now, the pattern, where we came up bullish, we came back down bearish, and we're coming back up bullish. So is it going to come all the way and test the supply box? Will it be maybe a lower high somewhere here? Is it going to come back down? Is it going to come all the way back down? Will it hit the green box? Will it be right there like a higher low, continuing then maybe with more volume, then try and possibly break out of here and then have a new all-time high? Will it be a fake out to a new all-time high, then it comes back down and then sells off like that? Could it possibly be a new all-time high where it breaks out of here and then it closes above and then retests this zone, we flip it green, then it's not a fake out and then it continues to go up? So there's multiple things that could happen this week, next week. Those are just some possible pathways that could happen, but we got to follow these daily candles from the last few days of this volume. So we did have this sell-off mid-December 2024. We bottomed out right there, December 20th, and then just before Christmas time, you can see how it was kind of consolidating. Then it started again. When did we get this green bullish candle? Thursday, January 2nd in the new year. Friday, January 3rd was just a spin top. Then we had good volume yesterday. So across the board was really good volume. And you can see it was a bullish ignited candle that started yesterday with no drawdown. So very strong candle. We can place a yellow line, like just to give us maybe a point of interest in the future right here. I'll make it a little thicker so everybody can see it. Okay, so that's a good point of interest for maybe this week to see if the sellers bring it way back down. Will it hold here? That's where this big day started. If I'm looking around 50% of yesterday's volume, right around here, here's the halfway point, 20,050. I'm above those two wicks. You know, if I'm just guessing, where is about 50% of yesterday's volume? Somewhere right around there. If I want to use my Fibonacci tool to find the exact location of that 50% and figure out a zone, like one notch above, one notch below, I can get my Fibonacci tool and put it from the high to the low. I can change the settings over here. I'm just changing these. So for my 0 starting point, I like to do green. My 236 is a kind of neutral area on the Fibonacci. I make it white. My 382 is another Fibonacci sequence number, 382, make it white. My 0.5, that's the one that I'm always looking for. That's my halfway point, make it white. My 618, that's the golden line, so I like to make it gold. My 786, I keep it white. Again, 1 is kind of like the full retracement from the green 0 all the way to the 1, so I make it like a red, so I know that that's where I started, that's where the retracement is, where I finish. I can do the opposite. If I want to add extensions, 1.618, again, I can go a white or a yellow, a gold line if you like. If you want to go extend it further, 2.618, then you got your numbers. So when I attach my Fibonacci on that candle, I can see right there where I kind of anticipated the yellow line where it was 50%. There's the actual 50 using the Fibonacci. So I was just off by a couple points. So right there's my 50%. If I want now to make my zone, I can go one notch above, which is the 618, come down to the 0.5, and then one notch below, which is the 382, and there's my zone. And since it's green volume and it closed very strong, I'm going to make that a green box, stretch it into the future, and then maybe if we get a pullback today or tomorrow or anytime this week, if it comes back down red, that's where the buyers might be pending and waiting in there before it comes all the way down to this yellow line and before we drop even further. Okay, so does that make sense, guys? How I did that? And then now following the volume of yesterday, we had a really strong day where it made a high all the way up there. And then near the end of the day, kind of sold off, but we still had the majority of that green volume. That's where we based our Fibonacci off of. We found the 50% zone. And then now just continuing with today's volume, we opened right where we closed. So that's a point of interest right there, yellow line. And when we opened, it was initially red, where it came red, sold down. That's our low of the day, 20,134. So I place a purple line for my low of the day and my high of the day. So I will only have 2 purple lines on my chart. The rest will be yellow for daily points of interest. And then once I go down to the lower time frame, then hourly will be white, and then my 5 minutes will be red. So I can see today's, it came down red, and stopped right there. So we didn't come into the box. It made a higher low. We still have this really nice bullish volume, but next to us, we still are coming off of the all-time high supply, and there's still red volume. So even if we have a bullish day today, we still need to come all the way up and fill yesterday's high up to there. So let's just continue following the volume. We came up, we're bullish. We have a high of the day already. You can see by the wick. Right there, that's our high of the day. 20,237, and we just pulled back from the high of the day. The volume is right here. We pretty much have momentum to maybe come back to the high of the day and continue to push out of here, but then we're filling yesterday's high wick. So my next point of interest will be exactly where was yesterday's high, and it's a nice whole number, 20,275. So I change that to yellow again to make that a daily point of interest to see if today's volume can get all the way back up and test yesterday's high. We still got to fill the wick, so there is exhaustion, so we still need to find our bullish volume to get up there. Maybe we don't get up there. Maybe that's it. They've secured the high of the day right there, and they're going to push this volume back down. So what I also like to look at is really quickly, I like to eyeball the volume that's in the candle right now from where it opened to where it is. Where's half of the volume? You can either eyeball it or you can use your Fibonacci tool if you want. I'm thinking halfway point is right there where I just placed it. And if I want to, again, make sure where I placed it, get your Fibonacci tool where it opened. Where's the volume right now? I know the volume is moving, but you see where the 0.5 is? Right where my yellow line is. So I'm pretty much right on it. So that's representing 50% of today's volume. So if we come back down, if the sellers push it down, I anticipate that the buyers will try and hold 20,185 right here if it gets down here. If they cannot hold half of the volume, this yellow line, sellers might have momentum to push it all the way back down to where the body opens. And then that's where the big fight will be to see if they can hold the opening price, the buyers or the sellers. If the sellers flip the candle, then we'll get a red candle, and then it will start to fill the bottom wick. And then we come back down to the low of the day, and then we test down here. If the sellers are in control and break a new low of the day, we could possibly fill all the way this part of the black chart, come down to our 50% zone, and see if the buyers are waiting down here. Okay, so it's just a game. It's like a football game. One team controls right now, like the green team is in control. We'll see if the red team will take control, but that's basically trading. It's like a game with two teams, and you can see now the overall daily. We had this long, nice bullish move. Came into that all-time high supply, sellers were present, pushed it all the way back down, and then we started to come all the way back up, and we're kind of right in the middle. So this is where you might also get some consolidation. You might start to see some daily volume also just neutralize right here and just consolidate and trade sideways. You might see it come up today, might see it come back down tomorrow, we might see it come back up the next day and form a flag here to see if it will continue to break out of here or sellers will bring it back down. Okay, so that's just how it is on the daily. Now what I do is I break this daily volume down into hourly increments. So then I just select the 1H, I move into the hour. Now it's showing me, I can see yesterday, Monday, January 6th, 6 a.m. This is where it had a big injection of volume. If I look at 3 a.m., 2 a.m. there's pre-London. If we were doing live yesterday, this would have been us. 3 a.m., 4 a.m., and then we would have been done at 5 a.m. We wouldn't have had the greatest volume. And then as soon as the call ended, 6 a.m. is where you got that big injection. That's pre-New York. That's pre-New York trading, 6 a.m. And then you see 7 a.m., 8 a.m. is COMEX and some news, and then 9 a.m. is Wall Street. Came all the way back down red, retested that green big body candle, got rejected, came back up at 10 a.m., 11 a.m. That was the high yesterday, and then we started to push down in the afternoon. 12 p.m. That's noon, 1 p.m., 2 p.m., 3 p.m. Then we got market close. This is our Asian session now. Futures session, 8 p.m., 9 p.m., 10 p.m., 11 p.m. Here we have midnight. Here's 1 a.m. Pre-London, 2 a.m. That's where I can see DAX is coming back up. Here's London market open. So you can see the hourly candle opened, ignited. It continued to push above the previous high, which was pre-London, and continue to push all the way up. There's our high of the day. So I can see the high of the day is now London market open, and that's why it's that purple line and got rejected and we're coming down. So will this hourly volume stay above this yellow line, which was representing 50%, or will we lose this? Okay, and then you can see like the hourly, there's good hourly structure built here at this purple line. Every time we come down here, there was that break, but look at where the volume closes, right near the purple line. Look at where this big body candle opened at 10 a.m., purple line. Look at these pullbacks, staying above the purple line. Pullback yesterday, staying above the purple line, staying above the purple line. So it's holding here. So we're going to see if we're going to continue to move back up, or if we lose our hourly open, we're probably going to retrace back down into here. Okay, so our hourly candle is an inverted hammer candle, but it's still early. There's 48 minutes to go. It's a long time. Okay, so what we can do now is go to the lower time frame, the 5 minutes, and then this is what we can look to maybe scalp. Look for, scalping pips, 20, 30 pips. We're not looking for a huge daily move here, because we're on the lower increments. So now I can see exactly at 210 is when it started to get bullish. 215, new 15-minute candle there. There was a little bit of a flag. Then again 230 started to move. New time in sales. 2 a.m. new hourly candle. 215, those the 15-minute candle. Always critical times. 230, 245, 3 a.m. 315. And so on and so forth. If you're a scalper on the lower time frames, pay attention to those 15-minute increments. They're very, very important. Okay, 230, 235, 240, and then 245, and then we got that big injection of that green volume, 3 a.m. That was London market open. That's when we made our high of the day. It came back up there at 305. It tested it, came back down. So right now we're kind of just trading inside at the high of the day and where there is 5-minute structure. So you can see that every single time frame makes its own structure. If I was to place a line like right around here, I go red. Okay, you can see how it's now the 5-minute is building a little bit of support right here, just above 20,197. We might start to consolidate now where it's green, red, and we're trading inside of here. If I want to trap all of this 5-minute volume for the time being, I can. And 5-minute volume might just continue to trade in here. Are we going to have a high of the day breakout? We'll see. Will it try to come back up and then get rejected back down? This looks like it's one top up there where it tried the high of the day at London market open, got rejected, coming back down. Will it come back up all the way back up there and test it? Will it be a lower high? Will they push it back down? Will the sellers close it below here, maybe retest this? Then they have momentum to drop it back down to these critical daily points and maybe the low of the day right there. Or is it going to continue to hold and the buyers step in and continue to bid this up, and then we try to break out of here and continue to move to the upside? Okay, so that's analysis on DAX. What we can do is now add some indicators if you like. I know some of you guys are familiar with this one. This green line is the 9 EMA. Okay, it's used more for short time frame trading. specifically like these 5 minutes. So we're currently still above the 9 EMA. So traditionally we don't want to sell until we get red volume closing below the 9 EMA. Right now we're still above it. And then we can add the 200 EMA to give us an overall indication of how we're moving. And you can see when it pulled back right here, kind of at the low of the day, it's targeting the 200 EMA back up. Again, we came back down to the low of the day, right above that 200 EMA, the purple line. Again, it came back down a third time. Now you see how the 200 EMA is starting to get above the low of the day, so it's getting stronger and stronger. So those are if you're using EMAs to complement your price action. You can add those. You can add volume bars on the bottom of your chart. So I can see how it was relatively low volume trading after midnight, and then we got that big volume spike at 3 a.m. That's the London market open, and you can see the size of the bars. How they were trading before, they're like 3, 4 times, 5 times bigger. So that's how much more volume is now in the market in London. So you can add volume to help with your analysis. So right now, you see how it closed red near the low below that 9 EMA, and then the next bar opened ignited red where there was relatively low, no to low wick on that previous 5-minute bar, and this is new candle at 3:15, your new 15-minute bar. So if you're looking at your 15-minute candle, you can see the big shooting star that happened 3 a.m. So it was started very bullish, came green, 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 all the way up to the high of the day. Then they rejected it back down to where it opened. And you see how the sellers took control of that candle and closed it near the low. And next candle opened ignited red, and they just pushed it right back down to that yellow critical daily point of interest line, and this is representing the 9 EMA of the 15-minute time frame. So we're almost touching the 15-minute 9 EMA, and then the buyers were present there to bring it right back up. We'll see if the candle will flip green, which it just did, and see if we can come back and trade back into this consolidating box up here. But I like to watch it on the 5 minutes. Okay, if we close back down red down here in the next 3 minutes, sellers might still have momentum to push it down, but we might see buyers flip it back up and come back trade inside here. Okay, so we'll watch this for another 5-10 minutes. We'll see what's going on, and then what we'll do is we'll do a side-by-side with GBP USD, if you guys like. Daniela, yeah, we'll look at GU in just a moment. We'll bring it up and we'll do an analysis on GU as well. And then we'll put both charts side by side, and then we'll watch both of these in London. Was that analysis okay for most of you guys? Was it, did you guys understand what why I placed those lines, where I placed the lines? Did it make sense, guys? You don't have to do what I do. It's just, that's how I trade. It's just, I color code my different time frames. So I know the yellow, again, are daily points of interest. I know this purple line is the low of the day. I know that this purple line is the high of the day. I know that this red line right here represents like the 5-minute structure. So I kind of trade based off of these lines. I tried to keep analysis simple. I don't know. It works for me. It might be complicated for other people that don't understand what I'm doing here. But I just hated in the past where I was flipping through the different time frames. I would go to the daily and then come back to the hourly and look at the hourly candle, then go back to the 5 minutes. And then I said to myself, why don't I just make it kind of easier by color coding, doing an analysis, starting from the highest time frame and working my way down and plotting the important points on each time frame. The important points are where it opened, where it closed, specific times of the day. So London, this is a very specific time of the day, like 2 a.m. pre-London, 3 a.m. London, and 4 a.m. very specific time. Again, as we move into New York, 8 a.m. is a very specific time. That's when you got Colmex market open and North American news. 9 a.m. is a very specific time. That's when you have Wall Street open. And 10 a.m. is when you have other red folder news. So that 8 to 10 block, this 2 to 4 block. Again, you might have near the end of the day, which is power hour, 3 p.m., 4 p.m., that block. And then again, the final block is when you move into the futures market, 8 p.m. and 9 p.m. You might have some Asian news. You got the futures market open up. And so those are kind of your 4 big blocks that I kind of base all my analysis off of. And that's what I work with. And then all the other times in between there, those hours, they are important, but they're just not as important as these specific blocks. And if you can base your analysis off of those blocks each day, you can start to understand the trend, the weekly trend. You can start to understand the daily trend. To me, that's just me personally talking. Those are the most important blocks of the day. The hours in between, the volume in between is also important, but it's just not as important as those times. So it's good to start your analysis off of those blocks. You don't necessarily have to trade those. Like I don't trade the Asian session too often. I'm just starting to trade the London session with you guys now as of late. But when my normal trading is always New York or post New York, but I always analyze the day before what happened in the futures Tokyo session, that block, that 8, 9, 10 p.m. block. I always analyze what happened in London while I'm trading New York to get a feel of what happened. Just because I wasn't trading it, it's still good to get a good feel of what happened so that you know what you're trading. Okay, so currently on DAX, we had a big bullish push at London. It looks like they kind of exhausted the high up there. They pushed it all the way up and then they brought it all the way back down. So you can see, guys, just another thing. I know I haven't taken a trade, but if you miss the London market push, that doesn't mean that's it. You miss the move. You can allow that to happen, and then maybe you can catch the opposing move, which in this scenario, the sellers. So maybe they kind of just pushed it to the high of the day. They created the high of the day, and since then, you can see that the sellers are in full control, and they're continuing to push it down. So where now are we going to find the buyers? Right now we have 1 bar, 2 bar, 3 bar, 4 bars. 4 red candles in a row pushing down. So the momentum is selling, but we still have this big uptrend that started this entire move. Where will we find where it can cool down? If I want to find where this started, this green candle right here at 210, I grab my Fibonacci tool, put it where it started, put it now all the way up to the top, that purple line, London's high, and I can find now, these are my ratios. We're right at the 382 right now. If it drops even further to that yellow point of interest, that daily point of interest, you can see how it's lined up with the 236. Where's that 0.5? It's right here. We're below it right now. Okay. Will the buyers step in and kind of close it back above here? And are we going to make our way above that 618 and continue to come up here? Or is it going to continue to sell back down? I don't want to complicate this too much with all these lines, but if you just want to kind of find the retracement of this move, you could add that Fibonacci just on this move. So from here, this candle that started this bullish move all the way up to that high of the day, these are our retracement levels. Okay. And I kind of want to see if the buyers can bring the volume right back in between here, that 618 and the 0.5. Like if it can come back, see how it's red below here now? Can the buyers bring it right back and trade inside here and maybe do something like this? Okay, I want to see if that green volume will come back into this zone and build and consolidate here so that it can re-attempt to come back up here. If it can't, then it might come inside here, and then the sellers might reject it back down, and then retest this, and then we're dropping even further. Okay? So I really want to see again, who will control this area right here, this neutral box? Okay, so far it came deep down red, but the buyers answered. See how they reject it, and now it's a bullish hammer candle coming right back up with 45 seconds to go. So let's watch how this candle will close. Will it close? Where will it close? Will it close inside here? Will the sellers push it right back down? Will it engulf that red bar? Could we start our next leg up? Patrick, yes, we will do FTSE 100. I haven't traded that in years, but if you're telling me it moves good in London, we will do it, okay? How about we do it for our next London call, which is Thursday morning? We'll do it, FTSE, if you guys all want. And that's FTSE 100. That's the UK index. Yeah, let's do it. I'm down for it. Is it a slug? We'll find out. Some days securities can be slugs. Some days they can move really well. Same with this one I'm on today. I'm on DAX. It could be a slug. It could move. We take what we get with the markets, guys. That's what I want everyone to understand. That it doesn't matter what we look at. Some days might be better than others. It all depends how the volume is in the market. But we trade responsibly. We trade smart. Some days this security might be trading better than others. Maybe another day it might be FTSE. Maybe another day it might be NASDAQ. Maybe another day it's GBP USD. Who knows? But I'm definitely down to do other securities and see how everything moves. Okay, so good answer by the buyers. Didn't really break any of the structure below us. You can see if you use the Fibonacci, it came all the way down and retested the 382. Okay, so it kind of made a higher low. We're kind of now maybe consolidating right here in this kind of golden zone right here. And this is the heart of consolidation. So this is where the fight begins. Will the buyers bring it back above here and close it above that 618? Will the sellers keep rejecting the buyers and then push it right back down? So you can see how many attempts the buyers came up here. They got pushed down. They came up again there. They got pushed down. They came up again and they got pushed down again. So you can see that there's a lot of resistance right here. Where it used to be that 5-minute red support line, now it's turning into 5-minute red resistance right here. Okay, so some days we're going to get this. We're going to get this where we're going to get a choppy market. I just want everyone to understand that if it's a choppy market, it's a choppy market. We can't force any trades. If we're speculating, maybe we should trade with a smaller size. Just feel out the market when we don't have good confirmation. Whenever you have a hunch or a feeling, but you're not too sure and you're kind of like in a consolidated range, take a small trade. Listen to what I'm saying. Take a small trade, something very insignificant. If you feel like you need to be trading, whether you're buying or selling this, because it's kind of like a coin flip at this point, who will win this? But if you want to get in, because this is where I feel that a lot of traders make the mistakes, is they go too big right now, they get faked out, and then they miss out on good trading volume because they're trading this garbage and they over leverage, and then they revenge trade, then they give back all their profits for the day, they give back yesterday's profits, and then we go through that same cycle. And remember, this is a new year, 2025. We don't want to repeat our old habits, what we did last year. We want to improve on these things. If you don't know what side to take, whether a buy or sell, don't take a trade. If you feel like you have to take a trade, you can't resist that urge, take a smaller trade. If this trade gets stopped out, it's maybe insignificant where it doesn't really affect you psychologically and financially to your account, where you can continue to trade and just learn from that mistake and move forward. To me, it's a good habit. Like I do that as well in my trading. I learned that that's what worked for me to keep me consistent, because I'm a scalper, so I'll take more trades than most of you guys. So I tend to make probably more mistakes than the average trader because I'm exposed more trading 1 minute, 3 minutes, 5 minute candles as opposed to someone who's trading 15, 30 minute or 1 hours. So I'm more exposed to the market. I'm trading more. I'm prone to make more mistakes. So what helped me was if I want, like for example, right now, if I want to take a buy before it kind of closes and I think that this leg is going to move up, I take a small buy up here. And then if it gets rejected like this and comes down and hits my stop loss, it's a very insignificant loss that I can recover quickly from that and continue trading. But if I go big on a buy here and then it comes back down and hits my stop loss, that might be detrimental and affect my psychology trading forward for the rest of this session, the rest of the day. Like if I'm only trading with 1% today of my account, that's my maximum risk is 1. If I go 1% on that whole trade there and then it goes against me, I could be done for the day. As long as you can walk away. Some traders cannot walk away and then they continue trading and they continue to compound the problem. Okay, so I hope that you guys are learning this. Everyone is different. Remember that. Everyone trades with different risk. Everyone trades with different capital. Everyone trades with different size accounts. So you got to find what works for you. Don't look at how other traders are trading. Okay, I'm just trying to give some ideas, some tips, what could help, what can't help. So you see, we're still trading in this consolidated box. There was a kind of fake out move up there. So I know that buyers bought up there and they got trapped up there, but it's still trading in the zone where there's not like maximal damage. So I know that if you're buying up here, the stop losses are probably below this low or down here. So I know that they're still in the market here. They're still in. There's not maximum loss down here. Same with these sellers that sold down here, sold down here, sold down here. Maybe their stops are just above here. So the market did not come all the way up here to stop them out. So we start to see this consolidation. Red, green, red, green. See how we're still inside here? So this is where we're flagging now. This is where trading gets boring. But this is where you need to learn discipline. You got to learn patience. We're smart enough to understand that the entire German exchange is not going to just trade inside this neutral box all day. We know at some point this is volume. It's going to spill over either to the upside or to the downside. Okay. Eventually it's going to do something like this. It's not just going to trade inside here all day, but there's going to be possible fake outs where it does try to come up here, then it gets rejected back down, or it tries to break and then it comes back up. So that's why sometimes we got to wait for confirmed volume closing above or below. We still don't have that yet. Okay. We'll stick with this for another 5-10 minutes. We'll see what happens through this consolidation, and then we'll do GBP USD together. We'll see if that one is moving a little bit better than this. And then Thursday when we come back, we're going to do footsies. We're going to be playing footsies with each other. We'll be playing footsies, okay guys? Footsie is the UK exchange, FTSE 100, also known as the FTSE. I don't make these names up. Okay, so we got a nice big strong green body candle. Again, retesting that previous high, exact high, tweezer top high, getting rejected. We still have 2+ minutes on this. Okay, so where and how will it close? Again, is it going to be kind of impulse and then they bring it back down, or is the green volume going to come back up and we're actually going to close above there? What do you guys think? Do you guys think that it's going to move bullish? Option 1. You think we're going to get something like this where it closes above, maybe retest this, and we're continuing to push up here? That's option 1. Or option 2, sellers bring it back down here, close it red below there, maybe retest this, we take out that low and we continue to drop down to here. That's option 2. Or our third option is it just continues to trade inside this neutral box. So we got option 1, bullish, option 2, bearish, or option 3, neutral, just staying inside this consolidated box, and we have to continue to wait it out. So these are the three directions of volume. There's only three directions. I'm not trying to make this into a tricky session or something like that, or to stump you guys, but price action only moves in three directions. It'll either move up, it'll move down, or it moves sideways. That's it. And the best indication is to wait for the body of your particular time frame that you're trading, wait for it to close, and then we get a better understanding and more confirmation, as opposed to just trading on impulse and guessing. And sometimes, yes, it does break out, and you don't take the trade because you're waiting for it to close. But that's the hard part of trading, is to justify: do you take the trade before it closes? Do you wait for it closes? What satisfies my mindset on that is I don't do woulda, shoulda, couldas, because up here you could have bought and then you would have been in drawdown. Here you could have sold and then you would have been in drawdown. So I don't play those games. I tell myself I'm waiting for it to close. If I'm going in on impulse, it's on intuition. It's how it's been building. Then also when it goes on an impulse trade, you gotta justify what lot size you're using. What is your conviction? Okay, look at this now. Okay, so look at how they closed and they gapped it up. It came right at the end of the candle. It didn't close right at the high. It closed near the high, and then they kind of gapped it up. You can see the gap in the market right there. See how they gapped it up? You see where the body closed right there? It didn't open right exactly right here. They gapped it up. Here it closed, but with that momentum, it came right up there. There was a small pullback to fill that gap and continued to drive. And what it did was created that new high, okay? But it's trading in this big red candle to the left, and now it got pushed down, but it's still holding. So let's see now if we start to form some type of support right here. Okay, I'm going to draw this as a green box to fill in, where it gapped up. Okay, see that? Okay, where now it filled that entire gap. See where it opened? It closed right here. It opened. It went all the way up here, and then it came back down, and you see where it went red, red, red. It now filled, it satisfied that gap. Okay, so this is a good lesson for everyone to learn about gapped up candles or gap down candles. So you see how now the gap got filled, where it came red, red, red. It satisfied that gap. It came down there and it triggered all of those pending orders that were waiting down there prior to getting gapped up. Okay, so you got to understand. Do you want me explain this again? Do you guys understand that? That's what's causing this bullish candle. Guys, this is a good lesson right here. You're going to see this often if you're on the lower time frames, and it's a good clue for you to understand what's going on. If you don't understand that, if you want me to repeat it, just tell me. I have no problem repeating that, but I want to tell you that this is very important. Davo, okay. Let me just walk you through it. Let me just clean up the charts, okay? So for you guys that said bullish, you guys are correct, but let me walk you through that gapped up candle. It's very important, guys, because you're going to see daily candles that are gapped up. You're going to see hourly candles that gap up. You'll see 15-minute candles that gap up. You'll see 5 minutes. If you scalp 1 minute, you'll see a lot of them, okay? So let me just walk you through this real quickly. Right here, you remember this candle right here at 3:30. So this is an important candle at 3:30. It's a new 30-minute candle. Also this one, you can see where it closed down there. Okay, this is another gap. We closed down there at 3:25. They gapped it up right there at 3:30. This is two gap up candles. So guys, just please pay attention to this right here. See right here where we closed? We closed red down here. Let me just show you. Okay, I place a red line. That's where we closed. At 3:30, ask yourself, why did this candle open all the way up here? We closed down here at 20,187.9. and then it opened up at 20,191. That's about 4 points, 4 pips above where it gapped up. So it came up there, it triggered all of the prices up there, but then look at how it came back down, red, 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 and it filled that gap. See that red line? It came back down red, 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 and filled that entire gap. So it satisfied those pending orders down there. Okay, it came down there, it gapped up, it came back down, it picked up all those pending orders now, and it came right back up to where it gapped up, and then got filled with that bullish volume where it pushed to the high, and look at where it closed. Okay, so we closed relatively right near the high. See where we closed right there? And then look at how they gapped it up again. They gapped it up, and then it broke the high, and then it came back down, red, 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 in order to fill that gap. Remember, I placed this green box to show you where that gap was in the market, and it came red, 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 and stopped right there. It filled the gap, it filled the void, it picked up all those pending orders, and then it drove with all that volume. So does that make sense, guys? And then now we came all the way up to this previous 5-minute move when London market opened up, that candle at 310, that high, pushed down, it came right back up there, and then they pushed it down. So now we are trading above this consolidated area. We made our way back out of here. So are we going to continue to drive to today's high of the day, or are they going to bring it back down to retest this green zone right here? So again, I got my scalp zones. It's either just going to trade neutral from right here, this white line, down to here. If the sellers take control, they'll sell it back down below here. I could look to sell back below here. I could look to buy this green box. But did you guys understand that gapped up principle? Okay, so it's a good lesson here for London. You might see that move now more often and understand what's going on. Maybe you'll see it in New York. Maybe you'll see it whatever security you're trading. And this doesn't matter what security you're trading. You'll see a lot of gapped up securities if you're trading equities. Like, for example, if you're trading Tesla, you might see a gapped up Tesla candle, and then it comes back down and it fills the previous gap and takes all the pending orders and then continues to move. Okay, so guys, if you selected the bullish move, you are correct. Okay, so remember the 3 directions. We traded sideways in here. It could have sold below there. It didn't, because every time it came down, if you look now, made a higher low, higher low, higher low. So the depth of market was building below us, and then we started to come right back up. So just like patterns, when you identify specific patterns, this was the one pattern where we came up to the high of the day, we retraced all the way back down, but didn't really break any of that structure. Good volume held right there, and then you see how the volume got above that 0.5, that 50, and then we continue to push up. Right now with this leg, are we going to come all the way back up and test the high of the day? Will it be a double top up there? Will it be a new daily high? Will it come back down and then retest this green box and we hold here and then go back up? Will we close below this? Then we flip the box green to red, and then maybe we're going to sell back down. Okay, so that's exactly what I look for when I'm scalping the markets. And I look for just legs. Okay, like one leg up, I could scalp that leg coming up. If I'm going down, I'll scalp that leg going down. If I'm buying again, I'll scalp that leg going up. And then as long as I get enough pips where I'm happy when I'm scalping, relatively 10, 20, 30 pips, I'm happy. I could pip and dip. But the goal is, if, for example, I'm just educating here today, right now, if I was to buy, like right there, my stop loss would kind of be below this structure. And then now as it's moving into profit, I measure the move. So from there to where, that's about 20 pips. When you're moving up there, then your only job as a scalper is to manage your risk. So when it's moving, you can take your stop loss and just reduce it right there in half. You can take it to break even. That's the goal, is then you have zero risk. You have no risk at all. You're up 15, 20 pips. And worst case scenario, if it comes all the way back down, you get stopped out at break even. You don't lose any capital if it goes in drawdown. So, but as it comes up 10, 15, 20 pips, then you can also learn how to scale out. You don't need to, you can learn how to close out 50%, 75%, 80% if you like, or continue to manage the trade. You got to wait for the bodies to close. Where they close, identify where's 50% and see if it starts to continue to hold and continue to drive. If it continues to make new highs, then you can take your trailing stop loss, like your profit, and then bring it below this yellow line and secure maybe 10 pips. They're banked 100%. And then if you're moving up 30 pips in the trade, once it closes, if it goes up, maybe at 20 pips, bring your trailing stop loss and secure those 20 pips. So no matter what, if it does retrace on you, you've secured profit. And then you look for another trade. And then like that is how you can compound your account without losing, without giving capital back to the markets. It's the best way to grow your account, and with controlling your risk and your drawdown. It takes time, but remember, trading is not just for one day. Trading is not just for a week. Remember, we're working for the entire 2025. Today's the first day back. So if you learn this type of risk management, think about if you have a good day today. Some of you guys had a great day yesterday, and it may be another good day today. Maybe you carry that momentum into next week. Maybe you do take a couple drawdown trades next week, but you're not risking everything that you gained this week. So then week over week, month over month, you can slowly continue to grow your account. Now look what's happening. We're testing the previous high of the day. Okay? And if I look at 50% of that previous big bullish candle, half of it is approximately right there. So if the sellers continue to come down red, 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 maybe the buyers will step in here and still hold 50%, and then we continue to move up. So that's a way how you can continue to maximize the bullish side. Okay, so we got a new high of the day, continuing to break out above that purple line. So guys, this wasn't too bad. If we get volume like this during London, we're going to have good sessions together. So just to recap, I'm going to go into GBP USD right now, but I just want to recap. So here it was consolidating right before London market open. London 3 a.m. opened with that bullish candle, which made that high of the day. Then we retraced all the way right back down, but then it came back into this 50% pocket. We added our Fibonacci from this candle, which started this big uptrend move at 2:10 a.m. So I plotted it from the bottom of this green candle to the high of the day at London. Then it auto-filled my Fibonacci. So then we figured out where the 382 was, this 0.5. And then you see where we kind of consolidated in here. We kind of trapped this together. And remember, I gave you the 3 directional moves. It's either going to move option 1 up, option 2 would have been to sell, and option 3 still would have been consolidating. So remember what I told you. Just understand that volume has 3 directions. In this case, if you said bullish, and I know some of you guys did, you said option 1, you guys are absolutely correct. So we're continuing with this trend where it made this higher high, we pulled back, it made a higher low, and now we're getting a new higher high. Okay? We'll see how high it goes. We might pull back. This might turn into higher low support. And then again, we might be moving for a new higher high. If we're looking to sell, we're looking to sell below critical structural areas. Okay, and that's a nice big bullish answer. So if you guys took the buy, congratulations. You guys should be proud of yourself for understanding that that was a nice bullish correction. Okay, a small pullback, So this is where too, if you're selling the market and you don't know where to kind of take some profit, you got to know you're selling against an uptrend. Okay, so it is a nice sell from like the high of the day where it dropped down. Like if you calculate those pips from the high of the day where it sold off of down to there, that's a 50, 60 pip move selling. If you get greedy and you want more and you want more and you want more, you got to understand that you're going against an uptrend. So that was a really nice pullback of 20, 30, 40, 50, 60 pips. And if you don't do anything, look at what happens. Then you're giving it all back away to the market. Okay, so that was a healthy correction, a healthy pullback. It held good support and continued to drive. Okay, so DAX, beautiful. Like the volume I'm seeing, I hope we get this on all our London sessions. This is really nice volume. This is the type of volume you want to trade. This is trending volume. This is where it made that beautiful higher high. It made a nice healthy pullback, and it allowed you as a buyer to get back in. To buy above here, to buy that next candle and make, so you didn't have to fight this trade. It came just naturally to you. Okay, so if we can get markets trading like this in London, in New York, in the Asian session, this is good trading. And it's got nice volume. Maybe this is great start of the year. There's good volume here. Okay, so that's DAX, guys. I just want to do GBP USD to just first, we're going to do a different security. We're going to do more securities during London sessions together. But let's take a look at how the pound dollar is moving right now. If you guys are trading that DAX and you guys are in a buy, just please use proper risk management, manage that trade. I'm going to do GBP USD. Okay, so we're on a whole different security here. This is now the pound dollar. We're doing now currency. Okay, so this is not an index like the DAX or FTSE or NASDAQ or Dow Jones or S&P. Now we're doing traditional currency trading, Forex. So this is the British pound paired against the US dollar on the daily. So what I can see on the daily is, if I scroll like this, if I zoom, I can see back here in 2021, okay, this might be going too far back. This pair was trading at 142. Then we had this big drop all the way. If you remember in 2022, this is when UK got rid of Boris Johnson. You guys have a prime minister as well like Canada. And then you had Liz Truss come in for, I believe, 3 weeks. And that's when the market tanked. You guys remember that? We were trading this live. And then they canned Liz Truss, I believe that's her name, and then the market rebounded. This is when it was almost at parity with the US dollar. How many times you guys that live in the UK saw this to be £1 for $1? I haven't seen that in a long time. Okay, so that was a great opportunity to look for buys on this, and it rebounded all the way back up to 125, pulled back, held 118, came all the way back up to 132, pulled back higher, low 120. We've just made this new high right here. This was October 2024, 134, and then since then we've been selling back down. Okay, now let's figure out what's going on the daily, go into the hourly, and then we can maybe scalp for the next 5 minutes. So when I just look for zones right now, we can kind of see where there is majority of supply right there, red box, stretch it across into the future. Is the pound dollar ever going to come back up to $1.34 up here? Oh, I don't know, but we'll see in the future. Okay, but as from there, when it started to drop in end of September of 2024, we started to have this decline over here. We do have other critical zones right here. This was a zone that was support, then turned to resistance right there. So I can also stretch this zone into the future, make a few adjustments here, because now I can see the price action. I don't have to guess anymore. So this is a higher supply. this is a lower high supply. I can see when the market kind of came back into here, they pushed it down. Came back into here, didn't really touch the red box, but went back down. It came back again in here, almost touching the red box, and then continued to push it right back down. I can see right here, again, where it pulled back into here, it got rejected, 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 rejected. And I can see in the past how it got rejected here as well, right here at this 128 marker right here. So I can see that there was resistance. It turned to support right there briefly, back to support with this big red bar closing below, back down to a red box, again into the future, stretch it into the future. We need to test this red box, 127, 128, before we can go up to 131, before we can go back up to this high of 134. So you see how there's levels, there's zones, okay? And now, where did we just find some support right now? We can see start of the new year right there. Thursday, January 2nd and Friday, January 3rd. Kind of bottomed out there at 123.50. And then if I look in the past, we bottomed out right there April of 2024. Okay, so if you started to do your top-down analysis for your pound dollar, you would have seen right there was resistance. Okay, it's kind of like a double bottom, a really funky one, where it came down, back up, came down, kind of closed above, and then one more pullback, and then that's what started that leg up right there. So you can see where it was holding as the neckline resistance. When you got that green candle close above, if you flipped this zone green at that time, and you listen to what Ron was saying, stretch it into the future, then look, you would have got a notification or an alert when it came right back down here in April. It would have notified you that it came all the way right back into that zone, and then it went back up. So if you continue to stretch this into the future, you possibly would have got an alert or notification pending if it came in here just this week. And then you got 3 bullish days coming out of there. Okay, so what I do is, that's why I stretch these zones into the future. And then what you can do is, if you have like the upgraded version of TradingView, you can add an alert in each one of these zones. And then you can get notified on your mobile, you can get notified at your trade station, you can get alerted whenever the volume hits one of these boxes. You don't necessarily have to be watching these every minute. Like, you can swing trade these if you like. You can trade these on higher time frames. You can do this on lower time frames. Whatever you do on a higher time frame, you can do on a lower time frame. Whatever you do on a lower time frame, you can always do on a higher time frame. Okay, so as I can see right now, since end of September, early October, sellers are in control right now. They're pushing it down. Buyers came back up, lower high, and then they pushed it back down, lower low. They came back up, lower high, and then they pushed it back down with a lower low. So the buyers now are bringing it right back up, but you see where we're trading? We're trading right back at these wicks. They rejected it there. They rejected it there. They rejected it there, there, and there. So we've got resistance, but we have a nice V-bottom recovery with the buyers that could naturally break it out, or they're going to get rejected back in here at 126 and then pull back, but then we got to make support off of these 3 daily candles, okay? And this is where now I start to dissect. Okay, this was more of a higher time frame, like monthly, this analysis, but now what we got to do is we got to start to make sense of this structure that's going on in here. So what I can do now is kind of open this up. So now what we're going to look at is this red box, this green box, and everything in between here. So if you guys want to follow me please. If you guys have any questions, then let me know. So this is what I look at, obvious zones. Was this not a green box right here, where we had this red candle, red candle, red candle, red candle fall down here, and then it stopped, kind of bounced back up, and then they pushed it back down. So that's a little zone. With that red body candle closing below, you see how they pushed it right back down, and then we kind of consolidated, and then this green candle closed above. So we got that green zone again going across, comes back down red right into that green box. We had that 2-day push, but we got a lot of resistance coming from here, lowering it. They push it back down. Again, it closes below. So that box now is red. and then I stretch it into the future. And then I can see now where it kind of impulsively broke out and closed below the red box. It came in there green, push back down, came in there, push back down. We might come in there today. This is today's daily candle. We're not too far away from this 126 red box. We might come all the way back up here, and then they might reject it back down. Or we got to follow this daily candle today and see, will it close above this red box? Because we have not had a daily candle close above this red box for a long time, since mid-December. So if we get our first daily green candle on GBP USD close above here, maybe we can make this red box green, pull back, and then trade off of this, and then we're moving all the way back up here this week or next week. Okay, so this is a critical area. All of us should place an alert and watch at this area 126 what's going to happen here on the daily. I can also see how it's now, can you see the bodies of the candles? You got red, green, red, green, red, and we're coming back up green. So I can see right now where we are consolidating. Just let your eyes do the work. Do you guys see where we're consolidating right now? So if I make this as a neutral zone and bring it, you can see here, we were consolidating there. It was almost exactly like the GBP, or sorry, the German 30 trade, the DAX trade, where it came down, consolidated, and it went right back up. We came down, and look how it's consolidating, but then right here, they flushed it down, but then it recovered right away in a couple days. So that's what we call a V bottom recovery. It came down, sharp, and then went right back up. Okay, so you see that that's a sharp recovery. Let me just make this a little bit thicker, this line. Sorry guys, there's a lot of explanations today, but it's good. I hope you guys are learning. Okay, do you understand what a V bottom recovery is? A very quick bounce. So good quick answer by the buyers. Okay, that's a strong answer. And they brought it right back up. It took 3 days to engulf that daily candle, but they came back up. Okay, so you can see the volume, today's volume, we're still in this really choppy area where it could be come up green, might go back down, tomorrow red. Today might even come back down, but we're pushing. So what I want to see is, are we going to close above here? And then maybe we'll get that next push up to there. Okay, if we're looking for sells, we sell below this consolidated area. We look for a red candle to push red, close below there, maybe retest this, then we come back down, trade down in here. Okay, so remember those 3 positional moves. We're going to either watch to see if it will close above here and retest this and move its way up here, or it's going to continue to trade inside this neutral box for the next few days and continue to accumulate, but eventually it will make a move to the upside or a move to this downside. Okay, remember what we said. There's only 3 directions of volume, but now we're on a daily candle. We're not on the 5 minutes, so this might take longer time to develop. This daily candle that we're on today has 13 more hours to go. Okay, now if we're analyzing some information, what I can see is from yesterday's bullish gap down ignited candle, it closed right there. Where's 50% of yesterday's green volume? Again, if I'm just eyeballing it, it's right around there. There's my yellow line. If I'm not 100% sure that that's 50%, I bring my Fibonacci tool, go from the opening price of the body of the candle to the closing price right there. And then you see where it's 0.5, 1.2460. There it is. My yellow line was precisely right on it. So that's my 50%. If I'm finding my green zone off of that candle, 1 notch above, which is the 618, 1 notch below is the 382. There's my green box. Stretch it across into the future. I can get rid of my Fibonacci tool now, and now I have my green zone. So if it comes down red, 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 that's where the buyers might be, waiting in there to buy that pullback, or they got pending orders in that fair value gap in that big daily candle. Stretch it into the future because it might not come back down here this week, maybe next week. You know, like maybe something like this happens. Okay, let me just show you. Now that we've identified that zone, we might get this, where it closes above here, retests this, we move back up to this resistance right here, maybe it gets rejected, and it comes all the way back down, close below there, it retests this, then the sellers sell it, push it down in here, and then as soon as it comes down in here, that's where it gets that big injection of volume, and then we're starting to get all that smart money back in here, all those pending orders. It gets that big injection, that big volume, and then it has enough momentum to take out this previous high and go back to the supply zone. Okay, have you guys seen this pattern often? This is your head and shoulder. Okay, there's your left shoulder, there's your head, there's your right shoulder, there's your selling, but then it comes right into a strong developed daily candle. And that's where the big volume enters and then takes it back up and it breaks this head and shoulder pattern. It takes out all of this resistance and then it goes to the next supply zone. Okay, that is a typical move in the markets. Some of you guys are very familiar with that move. Some of you guys might be new to you. Okay, but it's good to learn that. Okay, and the opposite can happen on if it's selling pressure. Okay, so now we figured out some structure with yesterday's volume. Now what we got to do is figure out some structure with today's candle. Okay, so remember what I do. Yellow for critical points of interest. A critical point of interest for me is where it closed yesterday and where it opens. I look for gaps in the market. You guys remember earlier we were educated about gaps in the market. Was there a gap here? No, there wasn't, because it opened exactly where it closed. So there's no gap in today's opening candle. So I place a yellow line, point of interest on the daily. This 1.2513, that's a good area, point of interest. That's the opening price of today's volume. If the sellers bring all of this green candle all the way back down, that could be a critical area I'd want to watch. Okay, so it opened right here. It was initially red today. GBP USD came down, red. It created the low of the day. There's a small wick. Okay, so at the low of the day, I place a purple line. There wasn't much of a sell-off today on this particular pair because where it opened, it just dropped a little bit and it went right back up. Okay, so we came right back to where we opened, and then it got filled with this green volume where the buyers took control, where it's bullish. We took out yesterday's high of 125.50 psychological area. So what I do is, again, I place a yellow line at that wick because that was yesterday's high. That is a point of interest. Are we going to stay, is the volume going to stay above yesterday's high? Is it going to come all the way back down red and retest yesterday's high? So remember, yesterday's high was resistance. And now with the volume above, yesterday's high might be an area of support now, okay? So that's a point of interest for me if we do come back down red here. Now, look at where we're trading. Look at the tiny wick up here. We are now currently trading at the high of the day. Like if I place a purple line right there, it's probably going to go higher, okay? Because we're right at the high of the day. So now, if it continues to push, all I can see to the left is we got to fill this wick, fill that wick, and that wick. Every time we come up here, they push it down. We come up here, they push it down. We came up here, they pushed it down. We came in here December 30th, they pushed it down. Now we're coming all the way right back up with strong green volume. So do we have enough now to fill these wicks and to break out of this red box supply area? If this daily candle closes, watch this candle for the next 13 hours. At the end of the day, do your analysis, some homework. Watch and see if this daily candle of GBP USD will close above here. And then if it does, okay, this is what you're going to have to do. This is your homework. If you get this green daily candle closing above here, what I do is this red zone, I make it green. And then if it pulls back and then comes red into the green box, I'm buying out of this green box. If I see a wick get rejected here and then push back up, I like to buy that because now I have the confirmation. It closed above. Now the red box can turn into a demand area. Pending buys are coming in. You get a nice healthy pullback, and then the big buyers are waiting to take it back up, okay? But it will be dictated whether this daily candle closes above here, okay? It might not even close above here. It might just come into this box and then go back down like it did on these previous days. So that's what we have to identify today. Is this box, is this zone still going to be supply? So I'm just going to go back to red, okay? And now another thing what I look for is this daily volume from where it opened and where we are now. I always look at 50%. 50% is like right around here, okay? What I could do is I could get my Fibonacci tool again from the opening price to where the volume is now. Where's my 50? 0.5 right there, okay? And you can see that the yesterday's high wick is right near that 618, okay? Again, if I'm looking for a zone of today's volume, okay, 0.5, I use it as my marker. One notch above is 618. One notch below is the 382 right there. So now that is my daily green zone going forward for today. And to see if the buyers can continue to hold this zone right here, stretch it into the future, okay? So now I've made my daily analysis, okay? So I got strong body right here, strong zone, strong daily candle closing above. We've got a nice daily candle forming today. So if we retrace, if it gets rejected and we come back down, I want to see if the buyers will still hold inside this green box and we push back up. We're in this consolidated zone right here. Okay, that's what's going on today on the daily. Will we continue to break out of here, or are we going to just consolidate in here? Okay. Now what I do is I don't want to stay on this daily candle this entire session. I want to break it down now. So then I go down to the hourly. And then now I can start to see we had this big sell Thursday, January 2nd, London, 3 a.m. Big sell. Then it kind of reversed back up Thursday, January 2nd, Friday, okay, kind of came in there. Then we move into this week. Again, when do we have our big green candle? Look at the times, 3 a.m. Eastern, that's London. So that's a good time to be watching the pound dollar is London time, okay? It came up, it retraced back down, okay? So look at what it did. It was a strong bullish candle at 3 a.m. yesterday, 4 a.m., 5 a.m., pulled back, and then 6 a.m. is pre-New York. Got that big injection of big green volume. It retraced all the way back down. This is very similar to how DAX was looking on the hourly. Consolidated on the hourly here. Here's futures market, 8 p.m. Eastern, 9 p.m., 10 p.m., 11 p.m. Here's midnight. Then we had 1 a.m., 2 a.m., and here is London right now. So look at London on the hourly candle. It opened red. It was red. It came down red. But again, if you sold that red wick, you got trapped because this is an hourly candle. If you waited the entire hour for it to close, it closed as a strong hammer. So then what it does, what it tells you is it came down there and it picked up pending orders. It didn't break the structure of what was being formed here. It just retraced back, hit all those pending orders, picked up that volume, and continued to come all the way up, not just where it opened, but it closed right at the high. That's a hammer candle. So a hammer candle is the second most bullish candle next to the bullish engulfing. And we continued with no wick on that hammer. We opened right here at 4 a.m., ignited, and it continued to push where it made the high of the day, that purple line. And now it's kind of getting retraced back down. So if I look now, hourly point of interest right here, where the hammer candle closed at 3 a.m. and where it just opened, that's where I draw a white line for hourly, and 1.25610 right here. If we can continue to hold this, or continue maybe flag up here and continue to try and take out that high of the day. If the hourly structure loses this white line, then it might sell back down into our green box. Okay, so there's a big rejection right now. We still have a little bit of green volume still left above this white line. So what I like to do is go into the lower time frames, the 5 minutes, and this is what I like to trade. This is what I like to scalp. I see right here, there was 5-minute resistance. That green candle right there at 205 closed above. That could have been maybe a possible buy scalp. and to take it up there. Just to give you like, now with a currency pair, like if you took that buy and it came up to there, how much profit, how much pips could you have made? Let's just understand when we're scalping now currency that move right there, it's good for about 15 pips, okay? Not 50 as if you're trading an index related security. This is Forex. So the moves are a little bit smaller due to the volume. Okay, so we got to understand that when you're trading Forex, you might not get those big moves that you normally get trading indices. Okay, then it sold back down, held, and came right back up. Look how clean it's trading, like really nice moves. Like right here too. See how it kind of closed with green volume above that yellow daily point of interest, and then it pulled back. Like one of these candles, for example, if you did buy, I know it's hypothetical, but if that's what you were looking for and you were targeting the previous high right here, and look at it did break out a little more, which created the high of the day. Okay, a move like that, 5 minutes, 10 minutes, 15, maybe 20 minutes, you're in a trade. 4 bars, 4 green bars. How big of a move? Okay, so if you're targeting your previous high, that's about 12 pips. Then you got that extension, 20 pips, and then the entire move was about 25 pips. And then it's retracing back down. Remember this white line? That was that hourly line. So will it come down? Will it hold here? Will we curl back up? Is it going to sell below here and come back down? Okay. So now that we're watching this, there is a little bit of structure on the 5 minutes. Right here used to be resistance. Turn to support now. Okay. So either this is what could happen with this is it could continue to trade at the high of the day and at this hourly point of interest and continue to consolidate here. It might just continue to consolidate and trade inside this box, or we're going to get sellers maybe push it, close it below here, retest this, and drop it back down somewhere in this green box, maybe right there at 50% of that big green candle, which started the big move right there. That's about half of it. Maybe it might retrace back down there, and then buyers bring it right back up. If you sell from below here and it comes down here, I always measure the move. So I know if I'm taking that sell, if it comes down to the top of the green box, about 10, 11 pips. If it can come down right there, that red line, that's about 18 pips. And that would be my target, because you're coming into a deep, deep area of demand. Every time where it comes down here, it pushes up, comes down, pushes up, comes down, pushes up. If it comes down here again, it might push right back up. So if I'm in a trade and I'm up 15, 20, 25 pips, I'm going to secure the majority of that position because it could be coming right back up. So that's one possible move if it comes down. If we continue to build our way and close above the high of the day, we might retest the high of the day as support, and then it's continued to drive back up into that big supply area. Okay, and then that move to the upside again, I measure that as well. If I'm taking a buy and then it comes up to maybe you're up 15, maybe 20 pips up there, and then you got to understand you're up 20 pips scalping, but you're coming into a higher time frame area of supply, and then it might push back down. Okay, another third option is it's going to just continue to trade inside here. If you can definitely trade inside here, like if you sold up there and it comes all the way down there, and then or buy it back up, I measure this zone. Is it enough to be trading in here? From the top of that consolidated zone to down there, it's about 14 pips from the top to the bottom, minus a spread of, let's say, a 1 pip, half a pip, depending on your broker, minus some slippage in there. Maybe you're netting 10 pips, but that's all that zone is offering. Okay, you can see that's all it's offering, unless it can break out above here or below here. If you want to trade inside here, it might be like a 10 pip move maximum. It might just come up 10 pips, 14 pips, and then come back down 10, 15 pips, and then go back up. Okay, so you got to know exactly what you're looking for when you're trading. Anticipate the trade, and when you get into the trade, you know what your expectation is. You know where you're going to exit. You know how you're going to manage the trade. That's guys, I want you guys to set goals for 2025, and that's what I want you guys to work on, is when you get into a trade, you're visioning, you're anticipating what will happen, and you plan out the trade before you even take it. And then it will make your trading easier. You'll understand more what's going on in the market, as opposed to just guessing. Where do I take out profit? When do I get in? Eliminate the guessing when you're trading. Okay, so what we'll do is we'll put these two side by side. Let's do... what happened with the... Okay, is there any questions about anything so far, guys? Okay, so just looking back at DAX now. Okay, so you see DAX, okay, just going back, closed above, it came back down red, okay, right there it broke, red, 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 but look at where it came down to, that red line. Remember I placed that red line at 50% of that green candle and came right back up and closed at the high, like almost as a hammer, a bullish pin bar, and continued to move higher, okay? So you see, it did come down red, 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 but no volume close below there. So if you waited for that full 5-minute candle, you see how it came down there, hit the pending orders, and came right back up and continued moving up. So that is what's happening with DAX. And when we look at GBP USD, we've got the leg pushing down right now. Okay, so let me just eliminate this hourly. And what security would you guys like to watch? DAX or GBP USD? I can flip-flop in between both of them. Patrick, DAX? Yep. Okay, so do you guys see DAX right here? We got these indecision candles now, where at this yellow daily point of interest. Okay, if we look at this RSI, I know some of you guys use this indicator as well, RSI. What it's telling us is it's a little bit overbought right now. You can see this previous spike when the market opened at 3 a.m. London, it was overbought. It got overextended, and then it pulled back. Again, the next leg up was this next leg, which pushed for a higher high, but you can see the strength was lower than the strength when London market opened up. And then we have again a next leg making a new higher high. Now we're at our daily point of interest, and the strength is lower than this peak and lower than that peak. So the strength is slowly decreasing. You can see how it's coming down. Okay, so the strength is decreasing, but the price keeps moving up. Okay, so that's what's called bearish divergence. Okay, it's still not giving us an indication to take a sell yet, because every time it sells, it goes back up. Every time it sells, it goes back up. Again, if you're following this type of indicator, it might give you a false signal. So what it's telling us is, it's telling us that the strength is decreasing, but the price, so we still don't have full confirmation to take a sell yet. We need to see the sellers close it below structure in order to maybe get more selling volume in the market. So what is one structural area I'm looking to see if sellers can close it below is below 50% of that green candle. And then if you can see to the left of the chart, you can see how it was the previous resistance of this big green candle at 345, and now we closed above it. There's 50%. Every pullback right there where it came down, went back up. Came down, went back up. It just came down and went back up. So what I'm looking for is, can the sellers close it below here? That might be what will trigger a push to the downside, and maybe can sell below here to fill that gap coming down. So you see here, this is a green box. It's still holding. Yeah, we can do gold too in London. It's no worries. We like to do gold more during New York COMEX around 8 a.m., 8:20, 8:30. But we can definitely do gold in London as well. It's no big deal, guys. Thursday, what we'll do is we'll switch it up. We'll do FTSE. We'll do maybe gold. We'll take a look at other securities. This is our first day back in the new year. I just want you guys to get a feel of how I do things. So if you guys are going to join me on these London calls, you guys, I'll do the analysis much faster. I know it's first day for everybody. Well, first day for me being back. I went on a little bit of holidays, a little bit of vacation. I went somewhere warm in the Caribbean, and I just enjoyed my time down there. So I'm back in the markets now, but I just want you guys to get a good feel, understanding of how I do things, how I plot, so you're not confused. But if you tune in on a daily basis, you'll get a hang of how I do things, and then I can go through the charts much faster. I can do the analysis faster. I can flip-flop between different securities, and we can just continue to look for trades, look for pips, and continue learning. But today there was a good example of gapped up candles. So I hope you guys learned from that. And now look for them, spot them, gapped up candles or gap down candles, and see if they'll come back up and fill that gap, if it will fill that void. It's a clue. You know, that's what we got to do when we're as traders, is look for clues in the markets. It's like a game. You got to look for those clues. You got to be alert. You got to be attentive to figure out those clues, and they will help you. Then you're going to understand why they gapped up, why they came down and filled the gap, and then they grab that volume, they grab the money, and then they continue to move up in that direction. So then you're going to start to understand this more and more and more. And then you're going to start to tell me, Ron, I'm starting to understand this, and it's starting to make more sense, and trading is starting to get more easier, okay? I'm not going to say it's easy, but it can become more easier if you start to understand what's going on. And you can start to anticipate the moves, okay? So right now, you see how DAX is still pushing near these highs, and our strength is still showing us bearish divergence. That's still not enough for us to just take a sell. Again, if you want to take a sell up here, you got to understand you're selling, and it could continue pushing high. So what I would do is, if you're selling up here, is take a small insignificant sell. Go in with a lot size that if you continue to go up 10, 20 pips and draw down, it's not going to affect you, and you can close that trade out and then regroup and look for another one, okay? But what we need to see is, we need to see sellers at least push it and close it below this structure. So right now, I can see it's consolidating. It's been consolidating for the last 20, 25 minutes here. Like right up here. At this daily point of interest, this yellow line. So you see how we're just trading sideways. It came up, went back down, closed red. Spin top. Opened, came up green, went back down red, closed right there. Spin top. This one opened, came down red, came back up green, closed right there, green volume. This one came right back up, coming back down red. So we're barcoding right here. This is spin top indecision candles. Will the sellers have enough to close it below this green box? And then maybe we can start to push our way down? Or is this going to just continue to form bullish flag and get higher low, higher low, higher low, higher low, build and continue to drive? Okay, and it could very well do that. It's been doing that this entire prior to our call, starting at 2 a.m. This is when it started that nice bullish leg. This is when London markets opened. There was the pullback in London market, and then this is when it held, consolidated at 330. We had that next nice bullish move that took out London's high, created that new higher high. We pulled all the way back, but again, it pushed up and closed above the high of the day, that purple line, if you can see it in there, attached to that Fibonacci. And then now we continue to push for a new high, and it might go extend and go a little higher. Okay, no matter what RSI is telling us, that's why I'm telling you it could give us a false signal. So it's still not ready yet to sell, because every time it comes down, it's going back up. It's coming down, it's going back up. The wick, if you wait for the body of the candle to close, I don't see any red body closing below there. So you know when we say that there's 3 directions, okay, we might get that push above there, that close, and continue to drive a little higher. Option 2 is the sell, but we need the red volume to close below that green box, retest this so we can flip the green to red, and then maybe we push down to there. Or it's just going to continue to consolidate inside that box. That's option 3. And then we stretch this again. Okay, so those are, again, the 3 directions. That's trading in a nutshell. There's no other direction volume can move. But sometimes if you're anticipating the sell before it happens, and you get, as that candle is coming down red, and you take the trade and the candle closes and it pushes back up there, you went in on an impulse before the candle got a confirmed close. So anything can happen in the allotted time. Okay, now this candle is closing in 10 seconds. It's closing near the high. So let's watch and see if we get a gap up candle continuing to drive. Okay, let's watch this closely right here. And if we look at the time too, it's 4:30 a.m. Eastern. So this is a new 30-minute candle also coming into the market. So what you can do is you can also go to your 30-minute time frame and take a look at what's going on. Look at the 30-minute structure. Okay, we had this strong push Monday, 10 a.m. Come all the way up here to that daily point of interest at 11:30 yesterday. It pulled all the way back. We consolidated in that entire Asian session. And then we started 2 a.m. Eastern, pre-London. Start, move. There was our London volatility, that red candle in between. And then 3:30 we pushed. 4 a.m. we pushed. And now we're opening up at 4:30, and it's continuing to push and make new highs. Where's my 30-minute structure above here? So what you got to do is look to the left of the chart. You can see where there's now 30-minute structure. I can see right over here. See where those wicks came down, went back up, came down, went back up. Here they came up and back down. Here they came up, back down. So in around this area, like this zone right here, I can see that there's a zone there. You can see there where it came down, back up, came down, back up, came down, back up, closed below, then it got rejected off of this zone and back down, rejected off of the zone and back down. Similar, same right here, rejected off the zone, back down. Here it kind of impulsively broke out and then pushed back down that zone. So if I drag this zone into the future, I can see where we are trading right now. You see, that was that 30-minute high right there, and then it's getting rejected. But if we continue to drive today up to here, that might be where there's going to be some resistance right up there. Okay, we're not there yet, but maybe we anticipate that for the rest of the day. You see, there it is now. Now when I go to the 5 minutes, that's that big 30-minute red box up there. Okay, that might be where it kind of gets overextended on these 5 minutes and has kind of like a blow off top where it goes up there, and then that might be a good area to entertain a sell in that red box. Even though that we have bearish divergence, it might be one more push to grab all those pending orders and then it sells off. So at that red box, what I do is I place an alert up there. I place a line, like let's say right inside of it. Click on it, right click on it, add an alert there, create. So now I've got, see that clock right there? I've got an alert at that big 30-minute resistance area. So if I'm on another chart, let's say I go back and I'm looking at GBP USD, or we're looking at gold, if that 5-minute volume trades right in there, I'll get an alert, and then that might tip me off to look for a possible sell up there, because I know it's getting overextended, and that's where that 30-minute supply is. Okay, and maybe it doesn't come all the way up there. Maybe it doesn't reach up there, okay? So that's just, if the volume wants to get up there, I allow it naturally to come up there, and that's where the big sellers might be, okay? So I allow the market, I allow the trade to come to me naturally. I try to avoid forcing trades as much as possible, but we know in this game it's impossible to do that because there's so much fake outs and so much opportunity that the markets show us on a daily basis, on every, depending on your time frame, every 5 minutes. Like right there, that candle could have been, you could have bought that and it came up for, again, measure that candle, and then it put you in drawdown, because then it comes right back down. So it kind of impulsively broke out for 13 pips and it got rejected and came right back down. Will it come back up? Will it close above here? Again, that candle just opened and just drove. So that's the impulse. It still has 40 seconds to go. Will it close back down inside here? Did they take out all that volume up there, those pending orders, and now they're going to slam it down? That's what we got to watch for. So big rejection on DAX. GBP USD could be closing red below here, 20 seconds to go. So keep an eye on GBP USD. You can start to see where there is starting to be now some red structure on the 5 minutes right there. At 50% of that red candle, it tested it, pushed down. It tested it again, pushed down. Tested it again, pushed down. So if we get kind of closing volume below here, then we might get that continue push down. If I'm looking for buys, I look for buys above this red box. If it can pick up some volume and come back up and close above here, then it might come back up to that high of the day. Okay, so keep an eye on GBP USD. If it closes red below here, you might get that continue push down. Let's see DAX, because DAX was really shaping up. Okay, so just look at how it closed. Remember, it came down red, red, red. It was a shooting star, and right near the close, last 5 seconds, it came back up and closed as a spin top right at where it opened. Next candle again on the 5 minutes opened ignited green and trying to push back up. But it's got a large wick over here. It's not like these smaller wicks. So it's got a lot of momentum. It needs a lot of volume to continue to fill this big wick and drive higher. So maybe it just drives a little bit and will come right back down. This is where now I'm anticipating maybe a sell, but I'm not. It's still, the sellers got to close it below structure, because every time they push it down, buyers are bringing it right back up. You can tell by the higher lows. There's a higher low where that candle turned into a shooting star, but it was a higher low where they brought it back up. This candle came down red, higher low. This candle came down red, higher low. It's still holding above 50% of this green candle. So therefore, it's still telling me that there's still a lot of buyers waiting and to buy this thing on every pullback. I need to see like a red candle come down and close below this entire structure in order to give me more confirmation to sell. Okay, otherwise this thing is still pushing up, and I don't want to counter trade. I don't want to fight the trend. I'll allow it to maybe it needs to drive all the way up to our 30-minute supply zone up here, this red box. That might be where we initiate the sell. And then if it comes up there, like naturally coming up there, doing something like this, that might be where it sells off and then does that move. Okay, and then it might be better to wait for up there. We might hit the sell and then have zero drawdown, because we're waiting for it to come up to that 30-minute supply zone, and then the 5 minutes could get really overextended on the RSI, and then that's where maybe the big seller is waiting. Okay, trading is a game of patience. Please, guys, if you can, when we set goals for the new year, resolutions, for trading, try and set a goal this year to be patient as you can, and allow the trade to come to you naturally. And I promise you, your trading this year will be completely different than your trading in the previous years. If you've really struggled and lost a lot, and you're struggling with your entries, you're struggling with impulse moves, just tell yourself, this year I'm going to wait for confirmation as much as possible. I'm going to try and wait for candles to close. I'm going to wait for the volume to come to me naturally at better areas to initiate trades. If you got to wait for these 5-minute volume to come to a higher time frame, like an hourly supply area or a daily point of interest, then that's what you got to do. You got to wait for that. Some days you'll avoid making unnecessary mistakes. Okay, just test it out. It's early in the year. Test it out this week. Test it out next week. See how it is. If you're making the improvements on your trading, then you know that something is working. If it's not helping, then we gotta figure out what to do and make some adjustments. So you can see here, it's still fairly bullish. So if you're trying to sell, you're just fighting this bullish momentum. Like, it opened ignited. We know an ignited open is a strong open right away. And as I said, it's got a big candle to fill. Okay, a big wick to fill. But look, it is filling it up. So it's very difficult to sell this candle right now. Okay, it opened green, and it green. It came up almost right up to the high of that candle and just got rejected. So now we have 20 seconds to go. Now what we got to do is we got to watch how this candle closes. Will a seller come in right near the last little bit and push it down? Will a big buyer come in right near the end and close it near the high and we push higher? Or will we close above here and build off of this area? There's so much going on. There's the close. So it's still closed with majority green volume. What I do is I go candle by candle. So I figure out where's 50% of that volume. It's like right around there. 20,283.5. So sellers will, if they push it down, they'll push it down and then test right here, 50% of that volume. If it's still holding, we're going to continue drive. But look at how they gapped it down. The candle again, this one. Bullish ignited candle. No drawdown. It came up green. Look at it, now it's trading right near that previous high. It hasn't broke it yet. Okay, so it came up and then they pushed it back down. But that ignited open, that triggered a very strong open. Now the sellers have pushed it all the way back down to see where we just opened. This candle has not flashed red yet. It just came down where we opened and then went right back up green. You see how there's no wick on the candle? Sellers pushed it all the way right back down to that strong open. And the buyers are there again, pushing it right back up. Okay, and look how they pushed it right back up again, right to the high. So look at the fight. They're fighting to break it out of here and continue to drive. So you still cannot sell this yet. And this is why sometimes this RSI indicator traps a lot of traders, because they're just looking at this thing and selling anytime it goes above 70. But when you're doing that, you're fighting this trend. And the sellers have not closed it below any structure yet. And then see the importance, guys, if you follow candles and you see how they open, when you get an ignited candle open, it should give you a clue that that's a strong open of that candle, and maybe it will continue holding for the entire majority of that candle until we get a close. So again, now it came up, but with all of that momentum, it couldn't break those highs. There, now the candle flashed red for the first time. It took almost 2 minutes. Okay, so now that was the first time the candle flashed red. Now that maybe changed the momentum. It kind of changed now the depth of market in this candle. So you see now how the sellers can now, since they broke the opening ignited open, now they got the selling volume. Okay, so it's a red candle now. Will it close below this green candle? Will it close below 50%? See where I have the red line there? 50% of that previous green candle. Will this candle close below it? Will it engulf it? Will we close back down in here? This might be a candle that may trigger selling momentum to come into the market. So let's watch this candle as it closes. Okay, so there was a lot that happened in this candle. Do you remember those highs where it couldn't break right there? So we got tweezer top highs, and it tried. It came up there with a strong, and then they completely shut it down. Okay, so now this is a strong red candle. Not only has it engulfed this green candle, but it's coming all the way back down to maybe this green demand zone. We're trading back in this consolidated box. It could come right back up. Okay, so we have to watch where this candle will eventually close. We have a minute and 20 seconds left. Do you guys enjoy price action? Are you guys getting better at understanding candle formation? Are you guys understanding the importance of an opening, a high, a low, a close of a candle? You'll learn more about momentum once you start to pick up on these things. If you're following the lower time frames, 5-minute candles, 3-minute candles, 1-minute candles, you will see more and more and more candles open, close, than if you were watching just hourly candles. So you can really learn faster on the lower time frames. Whether you're trading or you're not, you'll be exposed to more candlesticks, and you can learn this a lot faster. And then always keep in mind that all candlesticks all have the same characteristics. So if you didn't see this watermark in the back here and know that we're on the 5 minutes, and I told you guys this is a 30-minute candle, you guys would have no idea. If this was a daily candle, you guys would have no idea. If this was a daily candle, it opened, it had a high, and then it came all the way down and closed. Look at the gap down, okay? So here's a gap sell now. Look, see where it closed near the low? They gapped it down. We got an ignited red bar that's continuing with that momentum. So you see this little gap in the market that they've left here? Okay, we saw the opposite with the buy gap. Now this is a sell gap. Okay, so this is a continuation. Why? Because it's 4:45. It's a new 15-minute candle opening in the market. Okay, so remember those specific times I told you? Hourly, like for example 4 a.m., 5 a.m., the 15-minute candles, 4:15, 4:30, 4:45, 5 a.m., 5:15, 5:30, 5:45, 6 a.m., 6:15, 6:30, 6:45, and so on and so forth. If you pay attention to those times, that's when you're getting a higher time frame candle opening. So if you look at the 15-minute candle, that's where you got that big 15-minute rejection, close near the low, they gapped it down, and now you got that continuation move coming down. You could also look on 1 minutes to take trades as well, okay? On whatever time frame you feel comfortable. But now that this candle is dropping, if you have not hit the sell button, then maybe we have to wait for a pullback to sell. So remember this green zone? What I do momentarily now is I flip the zone green to red. If this candle bar closes in the next 3 minutes below here, then this may in turn turn into supply going forward into the future. I may have to wait for a pullback to take a sell. So I might have to wait for it to come back up green, 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 and then if it comes here, then I sell up there. Okay? It might not come up to me right away. It might come up 15 minutes later, maybe 30 minutes later. Okay? But this is a big push to the downside. Okay, so that was that bearish divergence that I was showing you, but it took a while to develop. And then you see it kind of started at 4:45 where they dropped it down. But this thing could come right back up. But when it comes up, maybe this might be supply going forward. Also, where this candle will finally close. Wherever it closes in the next 2 minutes, I'm going to figure out where 50% of the volume is. And then maybe that might be the pullback. It might not come all the way back up here. It might just pull back to 50% and then continue pushing down. Okay? Guys, I have about 10 more minutes with you guys, and then 5 a.m. I'm going to go right back to bed because I got to get up at 8:30. I got to get the kids ready for school. I do a little bit of Wall Street trading myself. And then Wednesday we have a webinar. I don't have anything planned right now. It might just be like a Q&A question. It's the Tokyo session time, 7 p.m. Wednesday, if you guys want to join us. Maybe I'll prepare something for us. I kind of want to get now, guys, going into stock education, stock market, and options. So we're going to start off slowly because I know some of you guys have never ever traded the stock market before, and options might be completely new to you. So I just kind of want to start with the basics just to understand what we're going to be trading, to go over the terminology. So, you know, when we're trading an option, there's calls, there's puts, there's covered calls, there's spreads, implied volatility, delta, like a lot of these words you've heard of, but now we're going to actually learn more about it. We're also going to trade some equities together. So those are names like Tesla, Amazon, Microsoft, MicroStrategy, Nvidia. What we can do is we can learn how to buy shares of the company and buy straight equity, or we can trade options on those companies. Okay, and then we're going to learn all about what are penny stocks, what are mid caps, what are the blue chips, what are the big names, what are the Magnificent Seven, all of those things. We're going to start to follow the stock and options market a little more, what we'll be doing on these sessions together. Okay, guys, and also what I mentioned, you know, if you were in a buy, it's always good to have a trailing stop loss. Like if you were part of that buy down there at 330, you see how quickly the move is retracing all the way back down to potentially where you bought in. And then it would be sad if you bought here at 330 and you were in the markets, you know, you got up really early, like me, for example, at 2:30 in the morning, and you took a good trade and you made a good percentage, but you never trailed it, and then it comes all the way back down. And then not only did you get up early, and you were, again, time is money, so you're here for 2 hours, and then the trade comes all the way back down to where you bought it, and then you not only did you get up early, but 2 hours of trading, and then you have nothing to show for. Okay, so the name of the game in 2025 is compounding your account, accumulating your account. The more capital you have, the same percentage, your account will start to grow faster and faster. So on a move like that, don't get too greedy, guys. Learn how to take some profit out of the market. You don't have to close your entire trade. Like that trade almost went up, let's say 90 pips from down here. You don't have to close out the entire trade. But every time it kind of closes above structure, you could have moved your trailing stop loss and secured up to there. So when this big bearish candle opened at 445, you would have got stopped out right there, but you would have secured approximately 65 pips on your trade, and instead of giving all of it back. Okay, sometimes it retraces back and goes back up, but again, you can't always bank on that happening. Okay, you can't trade with woulda, shoulda, couldas. You got to have some sort of plan and stick to it daily. Then it will become a routine for you. Then you'll know exactly what you're doing every single day. And then you'll be able to do it with your eyes closed every day. It's going to become a daily routine. So I'm looking to sell back up here. But remember what I was just saying? I was a little late on this. Where was 50% of this big red candle? Open, close, 50% is right there where the volume is exactly right now. So it came down, coming right back up to about 50%. Is it going to get rejected here? Are the sellers going to push this candle back down? Will this candle close green above 50% and have the next candle maybe come up to this supply area? We're looking for a sell up here. So this consolidated box now, we've moved away from there, so I remove it. This is where I kind of clean up my chart a little bit because I do have a lot of lines everywhere, so I can kind of tidy it up and anticipate the next trade. Guys, today was more of an education class for you guys. I know I didn't take a trade yet, but I was just first day back in weeks in London. I just want to test out the volume, see how things are moving this morning. But the volume, in my opinion, is very good. This is good volume to trade. It's not too choppy. It's making its moves. It's retracing properly. That's for DAX. Let's take a look at GBP USD. GBP USD, it's still in this consolidated area, so we still have not closed red below here. Okay, it came back up, came back down. Okay, maybe it's got to come up then go back down, but this might be a potential area to sell GBP USD after the call if we can break 125.61 right here and maybe push back down to 125.50, then right to here 125.42. So if it's coming back up lower high and they're pushing it right back down, look for a closure below here and maybe to continue to push down. Okay, that's for GBP USD. You can see it's made two tops now, like an M pattern where it came up, neckline, came back up, double top, pushing down. All we got to do is kind of close below there, maybe come back, retest this, get rejected, and then we start to push our way back down. Okay, if you're looking for buys, you're looking for buys above the red box. We need to see the buyers come back up and close it like they did on this green candle, but you see how quickly it got rejected and pushed back down. We got to see it close back above there, retest this, and then continue to drive, and then we might get a bullish high of the day and continue to break out further. Okay, but the volume looks good today. I'm happy with this volume. Hopefully we get this volume trading the rest of the week like this. This is good. Okay, so you see DAX came up to about 50%, and now what I do is I trap the volume. You see now where we're consolidating below 50% of that big red candle and back down to our purple line, which was the high of the day, now acting as support. So again, I just trap it, and in the same strategy. We got three directions, guys. You guys know this. If it comes back up bullish and closes above here and retests this, maybe we might be able to break that and drive higher. But I would be maybe looking to maybe sell below that red box. So maybe I would just be cautious. I would be looking for the buy setup to see maybe if it can break above there. So what I would do here is extend this consolidated box up to there. Because sometimes if you are buying that, then it gets rejected right there and then sells off. Okay, because that's where it started the big sell. So what I would do to continue a buy is see if it closes above this red box, retest this, then it goes up. Okay, if you want to continue selling this, wait for it to close below here, retest this, and sell back down into here. I've kind of opened up this consolidated area because now look at the size of the volume. The candles are getting much larger because we're getting close to 5 a.m. now and getting close to 6 a.m., which is pre-New York. So maybe now we're getting a little bit more volume. So kind of open up the consolidated area just a little bit more. Okay, but you guys understand that these are the three possible directions. We'll continue maybe going to the upside. We'll maybe start to break down to the downside, or it's just going to continue to trade in this neutral box. Again, you can trade in here. If you sell down here or buy this, just measure the zone from the top to the bottom, from up here down to there. It's not bad, 25 to 30, 27 pips. Okay, so kind of like that red candle dropped 20 to 25 pips. And then if you bought back up green, it's coming up maybe 20, 25 pips. It might come back down. Just so you know what your zone is. If not, just continue to be patient and understand DAX is not just going to continue to trade in here all day. It will eventually maybe try to make its way out of here and continue the uptrend, or it might start to sell back down in here. Just set an alert here, below here, set an alert up here. And you don't necessarily have to sit at the trading station all day. You can go do what you got to do, and then you will get an alert when the volume reaches this level. And then it's just you wait for confirmations. And just try to the best of your ability to not take impulse trades. If you are trading, this is just a tip, guys. Again, if you are trading prior to a candle closing, like here, this candle opened and went red, red, red. If you took the sell right away, take a smaller trade if you're trading without confirmation, if you're trading on impulse. Because if you took a quick sell and it was with a smaller size, a feeler trade, and then it reversed on you and went up here and stopped you out, it probably wouldn't be as big of a loss if you took a normal trading size. So that's what I recommend. Trade with your regular sizing if you have full confirmations, if you waited for bodies of candles to close, if you got a retest, if you got a proper rejection, then trade with your regular sizing and place an appropriate stop loss at structure. If you're going in on impulse, trade smaller, because the impulse trades are the ones we tend to make a lot of mistakes on, and those are the ones that ruin us as traders, because we tend to leverage too much on them, we tend to bet too much on them, and it's kind of like guessing. We want to eliminate guessing from trading and make this more confirmed trading, okay, to the best of our ability. No one is perfect, no trader is perfect, but you can limit your mistakes, okay, that we can all do that. It's not that difficult to do that, guys. So it's 5 a.m. I'm going to go back to bed. I appreciate you guys joining me this early in the morning. So tomorrow, Wednesday, we're going to have a webinar, Tokyo time, 7 p.m. Join us if you can on YouTube and Zoom. I don't have anything planned right now. We'll see if I get something planned. If not, it'll just be a Q&A to get started on the new year if you guys have any questions. But I'll figure something out. And then we'll be back Thursday morning for London again. We'll do footsie. We won't be playing footsies together, but we'll be looking at footsie. That's the UK exchange, and we'll do gold on Thursday morning, okay? So we'll switch things up, and we'll take a look at how those securities are moving. If you guys are going to continue trading today in New York, please trade careful, proper risk management. If you hit your daily goal, get out of these markets, and let's learn how to compound daily profits, daily pips, and continue to compound and grow those accounts, guys. Be disciplined. Okay, this is the year where you're going to learn discipline. Okay, no more gambling in these markets. Happy New Year to everybody. I wish everybody to have a safe, happy New Year, a blessed New Year with you and your family. Trading aside, I want you guys to be just healthy, happy. You know, you're learning a financial education. It takes a long time to learn this stuff. Take your time. Don't rush the process, and just have fun with trading, guys. When you have fun with trading, that's when you see your best results. When you're stressed out and you're struggling, that's when you're going to make trading matters worse. Okay, so just be smart about this, guys. SST is here always to help you guys. Just trade careful. And let's have a great year together, guys. If you want to join the team, we would love to have you guys on the team. On YouTube, guys, you got a free Telegram channel pinned at the top of the channel. It's here for you guys. Promos, giveaways, everything that we do at SST, the scheduling and all of that. It's all available for you guys here. There's a free blog on our website for you guys as well, stocksnipertrading.com. Go to more blogs. You can join the team and join our free blog over here, okay? Don't forget, this Friday is NFP. Please trade careful on NFP Friday morning, okay? Thank you, guys. Have a good day. God bless, and we'll see you guys tomorrow.
Recording stopped.
Hey Hey guys, good morning. Welcome to the live session of Stocks Never Trading. My name is Dave, guys. My partner is Ron. Let's get down to business here, guys.
In on US 30, sell. Okay, I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please secure.